Good morning, traders and investors. Hope everyone is having a good day to start the day here. Earnings parade continuing and still lots left to go here in the Q1 earnings season. We're going to talk about why it's so hard to trade earnings sometimes. Sometimes you have some good days, sometimes you have some tough days. Macro headlines here this morning kind of dwindled away. We had a couple last night. U.S. considering exempting some U.S. automakers, and also a headline out of China, U.S. on China, that auto parts could be exempt from China. But besides that, kind of a quiet macro day here. We're going to talk about IBM. We're going to talk about Chipotle, ServiceNow, Procter & Gamble, maybe a little Merck, a couple airlines reporting overnight. Our guest today at 8:35 a.m. Eastern Time is Jim Tassoni. We'll see what he's got on his mind. Folks, let's get it going on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Christian, what's going on? How's your morning going?
Good morning. A little bit quiet. Turn those machines back on. What's going on? It's so quiet this morning, comparatively to what we've been experiencing. Let me do a quick rundown of international markets last night. Hang Seng down 0.75% last night. Shanghai was essentially flat. Nikkei up about 0.5%. And European stocks are quiet this morning, too. They're all mostly in the red. European stocks, but just down fractionally, down about 0.3 of a percentage point in European stocks. Let's take a look at crude. Crude, I feel like, is, speaking of quiet, crude has been kind of quiet. It's clawing back a little bit since that big sell-off that we saw a couple weeks ago, up about 1.2%. Let's look at what net gas futures are doing. They continue to move down here, down another 1.8% this morning. Let's head over to copper. Copper futures, which have been strong recently, they're up about another 0.7 of a percentage point, a little bit of a reversal candle there yesterday. Let's move over to gold. Gold coming back here a little bit, up 1.5%. Again, a lot of volume the other day, toppy looking candle, but it's hanging around a bit, up 1.5% to start the day. Let's go over to silver, which had a big day yesterday. Silver this morning down 0.33%. So a little bit of a retracement, but very strong day yesterday. Very strong from the lows, kind of like what copper has been doing. Bonds this morning, reminder that you got a 7-year bond auction today at 1 o'clock. Again, 7-year bond auction, 1 o'clock. Bonds up a little bit. Again, funky looking candle with not only with what happened with equities yesterday, but bonds also gave back a lot of the gains yesterday. Finally, Mr. Bitcoin, which has been showing some strength this week. That's not the right contract. Let's try that again. Bitcoin, where's Bitcoin? BTC. Sometimes they switch these things around on me. That looks better. Down 1.2% this morning. So still breaking above the 50-day moving average, but a little bit of digestion. How can we forget equity futures? Again, a little bit more quiet than what we've seen the last couple days. Down about 0.5%, but all over the place this morning. A little bit down, then back to flat, down again. NASDAQ futures also down about the same. I'm watching the 20-day moving average this morning to see if these can stay above the 20-day moving average. And then finally, Russell futures, those are also down 0.6 of a percentage point. You could see that's a pretty decent rejection there at the bottom of the value area for the year, something that I'll be watching for today. So good morning, guys. Are you guys ready for the NFL draft tonight? NFL draft coming at you tonight.
What city is it?
Nice, good call.
Where is it? The draft, do you know?
Is it
it's not in New York.
It was in Detroit. Remember when it was in Detroit? It was awesome last year. But
is it in Seattle? Well, are we all looking at the same time?
Yeah, we're all looking it up.
Chat knows.
No winners.
Also, a big
Green
Pistons
Bay.
playoff game tonight. Green Bay. I knew that.
Green Bay.
Yes, and NBA playoffs, NHL playoffs, a lot of
don't even
sports.
talk about the NHL playoffs. They're dead to me. They're officially dead to me. I stay up late watching my team.
Don't get them
I
started.
watch my goaltender that can't stop anything. So don't even get me started. I'm having a day, and the day started it started last night with some bad trades, but this day has started bad for me pretty much because my team got smoked last night. It's down 2-0. So this is what sports do, man. They just tick you off. Tough.
Dennis, we're gonna turn it around today on pre-market prep. We're gonna have some good content. We're gonna have some good info. You're gonna be able to express yourself here to the.
That's gonna fix my sports team.
Yep. That's one more.
So, Christian, you were gonna say something.
Dennis going, why are you always so sunny, Brent?
I expect to be fully disappointed tomorrow with the Giants drafting number 3. I'm so worried about what they're going to do, but I know folks want to get to the equity market, but I'm very nervous sitting at pick number 3. Please trade down.
There you go. We're always nervous when we watch our teams. I mean, you know what the best thing to be is a bandwagon fan. They got it the best because they don't care on all the crappy years, for like years and years and years. They just don't care. And then all of a sudden the team's good and they're like, oh, they got the jerseys and they're partying, and then they win a championship and they're in the parade. And then the team's bad the next year and they just don't care again. That's where you got to be. Bandwagon fans is where it's at. I'm the hardcore fan that watches every single game. I'm watching and following everything, and waking up and thinking about your team and going to bed thinking about your team, not wanting to watch with other people because I don't want to watching my team. I mean, this is like a hardcore fan. So there's 2 types of fans, the bandwagon fan and the hardcore fan. If you got you young kids out there, stick with the bandwagon category because hardcore is just, or fair weather, whatever you want to call it. But hardcore fans equals a hard life because, in most of the leagues, there's over 30 teams. So you think about your odds in any single year are really about 3% to win a championship. You'll be lucky to watch a couple of championships in your lifetime if you follow all that. So that's Dennis, my thought process. Fair weather fan, bandwagon fans, you guys know where it's at.
Dennis, do you wish you could be a bandwagon trader?
Define bandwagon. Just in the good times? Yeah, for sure.
Just trading in the good times.
Just trading the good times, not the bad times.
Trading away.
Either
and that's kind of how it was too. And then boom.
Just take winning trades. We don't have losing trades. Like I wish I could be like everybody on Twitter. I only have winning trades. We see these advertised every time I tweet something. I have 10 people saying follow this person because they only have winning trades. They were 100% right last year. You see it too, Christian. Every time you put X is just just so much spam. It's just completely out of hand now. But I mean, every time I do a tweet, there's literally instantaneously 5 or 6 responses. Follow this person because they turned 10,000 into 10 million in 3 days. Just crazy. That's what I gotta be. I'm gonna just do winning trades now. No more losing trades. So, my New Year's resolution next year is going to be to not have any more losing trades like all these heroes on Twitter. Is that possible, Christian?
Well, no, number one. Number two, like, I feel like I love sports analogies with trading. And like, one of a great trading analogy is like, you could be wrong in trading, but don't stay wrong. I've been staying wrong with the New York Giants now for like the last 5 years. It's been horrible. It's been one blow after another. So I've been staying wrong with them, but I'm sticking through it for now. I'm being stubborn.
So here's my 3 teams, because my main sports, I don't watch a lot of basketball, but it's the Oilers in hockey, it's the Tigers in baseball, and it's the Lions in football. I have not seen a championship in any of those in 35 years. 1990 was the last time.
Got close, I was 14 years old.
And I didn't even appreciate it back then because the Oilers were so good back in the 80s. I just knew winning. I didn't even know losing. So I didn't appreciate it back then. I just expected them to win. Obviously, Tigers 84, Lions, forget about it. Never happened. So, I mean, sometimes you just don't even get championships. Poor Leaf fans, You're talking 55 years or something it is now since the last championship. So, anyways, we've been talking sports so long. Everybody shut us off here. They're going to get mad at us here. Let's take it to stocks. There is a point here. I do have a point here I'm going to make here too on not having losing trades, because not only did I have a bad night in my sports team, I had a very bad night trading. Oh my gosh, what do you mean? That's not possible. People don't lose and say it publicly. I say it publicly. First things first, the night started last night in the STN room where I got picked off on LUV. They reported early and I got picked off. What's that mean? Well, I was making markets after hours because I'm like, you're working it a little bit. Well, LUV drops the report early. They were supposed to report this morning, but no, they report their crappy earnings last night, and I get picked off on that. So that's the first loser last night. And it's like always fun when you get picked off. What do you do when you start losing? You work out of the loser. You don't hope for it to come back. You don't say, oh, yeah, well, I'll just hold on to this. This trade will become an investment. No, you work it out and you move on. But, it was one of those nights where, there was some chop. Obviously, I got picked off there. I'm doing a little bit of a complaining session, but I'm trying to teach something here too. That one, people actually do lose on stock trades, even though nobody's talked about it on Twitter. But two is like things, that you do wrong, because a lot of times people come in and they say they're doing right. Things, you learn more from your mistakes than you do from winning trades. That's always the case. So, and then the other thing that I did wrong last night, and then I'm going to let Christian talk about his night here too. But the other thing I did wrong last night was I was long Comcast, CMCSA, and I was leaning on a bid. So what's that mean is that there was a lot of bids last night at like 34.40. So I was like, I can buy this thing at 34.50 and I'll just sell it at 34.40, before the end of the night so I don't have to take it through earnings. Well, I get sidetracked. I get a pile of positions on. I forget about it. I forget to sell the stock last night. So I forget to sell Comcast at 34.40. So I'm like, okay. So I thought about it after 8 o'clock. So I throw it out there overnight. I'm like, maybe somebody will lift me overnight before the report. I knew they were reporting at 7 o'clock this morning. No takers. Nobody's interested in trading this thing overnight. No Robinhood person, nobody. So I'm like, okay. So at like 6:55 this morning, I'm like, I can't be out there. I can't just have my order sitting out there, hoping to sell it at 34, get my money back out at 34.40 because it's going to report earnings. And I don't want to get picked off. What if the earnings are really good and this thing flies? Because you never, for one thing, and this is the teaching thing, is when you have an earnings report, you can't just sit an order out there close to the market and expect to make money. It's like a lose-lose proposition because if they miss and guide down, the stock tanks and you don't get filled on your sell order. If they beat and raise, you get filled in your sell order and the stock blows through you. So no matter what, and that's why this market always goes wide on news. That's why the algos go wide on news. So they don't get picked off by a more, faster informed trader. So anyway, so I pull the order to sell it at 34.40. The thing beats, Comcast beats. And if you look at the chart, pops to 35, instantaneously pops to 35. So I'm looking at it, I was like, oh, it's a pretty good report. Literally 30 seconds later, they start hitting 34.20, 34, 33, all the way down to 33. I'm like, holy crap. I'm like, this is just my night. So anyways, I ended up getting out of Comcast at 33.5, lost, a point on it. But that's the story here, is just telling you, when you're trading earnings, you've got to I don't regret pulling the order, even though I would have got done at 34.40. I didn't know they could have beaten raised. So it's tough. And that's going to bring us also to the question here too, Christian, which we're going to go into is we see GM and Ford last night ripping on their headlines and then they immediately sell off. It's like, why not just sell every rip? So Christian, I talked for 5 minutes there, ranted. I want to get your thoughts, one, if you had any thoughts on these stocks, but two, I want to just ask you about selling rips, because it seems like it's the easy money right now. Why don't we just sell all rips?
Well, I did that yesterday. I did something that I don't normally do, but I had talked about this yesterday. I had a good feeling in ServiceNow. I had mentioned that SAP had good. I wanted to sometimes you want to get the tone of some of these names that are going to be reporting earnings. So day before we had SAP coming out, which is a big software name in Europe. They come out and they rip higher on earnings. Pega was another one too that we covered yesterday. Smaller name, more like ServiceNow is more like SAP and maybe a little bit like Salesforce. But Pega had this huge move yesterday. So I was looking at ServiceNow yesterday and I'm like, I started to kind of leg into a position yesterday. And again, I don't normally like to do that. I don't normally like to take names into earnings. I usually will play it with via options. But I'm like, you know what? I got to take it. I just had a good feeling. We talked it. we talked a little bit about it yesterday afternoon too, and just about the history of ServiceNow. They've been up 7 of the last 10 quarters. So I took a shot at this, and again, I was very nervous going into this because I've seen gap downs in this name too. But
Yeah.
it worked out for me, and I'm out of it. Like I I was going to hold on to a small piece, and I just said, you know what, in this market, like I'm okay, and taking the gains. So I was selling. So I think I sold some at 850, then it's some at like 875, and then I got out at 880. I didn't get the ultimate top. I think it traded up to 900, but I'm like, hey, I was right. I took, right on the hunch, and I'm just not going to mess with this market. Now, I will be watching the stock today because you can always get back into it, and it could be a nice, it could be a nice swing trade. But if I decide to get back into it, but the level that I would be watching is 874. But to your point, I agree with you completely about right now. I'm in sell the rip type mode. I'm not overstaying my welcome in stocks because it seems like when I do that, I'm getting punished at some point, where a stock will go down. So that's my mentality right now, and I'm trying to adhere to that as much as possible. I did that yesterday with Robinhood as well. So that's where I'm at. I wanted to bring up too, like we've got some interesting movers with the airlines. You mentioned LUV, but you also have a couple of other names out too. You've got I think American Airlines and Alaska, and
Yep.
I think when you've got a couple of these names out, you can kind of get an understanding of what they're saying about the whole travel group, which I think is basically
Sure.
they're pulling, some of these companies are pulling their guidance.
Mm-hmm.
I
So
mean,
Yeah, I
we've been
think
talking about the weakness in airlines for a while here. I mean, these
yeah.
stocks have absolutely been killed. There's absolutely, less international travel going on here. The airlines have told us that. There's just, a lack of confidence in the markets right now too, and I believe the wealth effect is playing here too, a play in here as well. But this has been, the airlines have been an epic disaster. I mean, there has been, and again, we can say, oh, the S&P is 10% off the high. It hasn't been that bad. It's been really bad for some stocks. Like American Airlines is down 50% in 2 months. 50% in 2 months. LUV has been a disaster for basically 5 years. From 2020, $60 to 25. The airlines just have their moments every once in a while, but they just aren't the long-term place to be. And to your point, Christian, the UAL huge run we had at the end of the year, you just think about that, when UAL went from $40 up to $116. If you're not taking the gains at a certain point in time, eventually the market takes them from you. And UAL, hasn't come fully back down, but it's come a long ways down. Delta has come fully back down. It went from 40 to 70 and back to 40. AAL went from 10 to 18 and now to 9. Airlines are just not good long-term investments, folks. They haven't been really, and you can look at the long-term performance and they just haven't been. So they've still, they've obviously, it's expenses, it's fuel. There's lots of reasons behind that, but they just haven't been a great place to be long-term. So it's like you get these rips on industry stocks that are probably, just, industries that are just really tough, and they go up like American Airlines 80% in a few months. You got to be taking those gains. And maybe we're just in this market where, that's the new norm. Like take the money and run, because if you don't, the market takes it from you.
Yeah, and I don't know how many airlines we have left to try to apply this to more airlines, but maybe consider this for other sectors. The airliners have been doing this weird thing where they're kind of halfway between withdrawing guidance and saying they're not restating guidance. I don't really understand it yet. Like, I think Delta did that. I think UAL did that. American just outright withdrew their guidance. But the point is there's so much uncertainty in the sector that the companies are having to kind of make up this piece of language to say, well, we're withdrawing part of our guidance. We're not restating our guidance. It's just an indication of uncertainty. Could other sectors kind of do this little weird thing with their guidance? Yeah, I think so. I think we're just preparing ourselves for more and more uncertainty as we're getting into this earnings quarter here.
It's going to be all uncertainty because the administration is full of uncertainty. When it starts right from the top, when they can't figure out what they even want to do with tariffs. Oh, we're tariffing. Oh, no, we're doing a deal. Oh, no, we're bringing them down. Oh, no, we're putting them back up. It starts right from the top. So, when you've got, something as, like tariffs, which are impacting, so many different industries, and you have this much, changing of your mind, uncertainty from the administration itself, the companies can't even hope to figure out guidance. Sure, we were putting a list together in the STN room of tariff-free stocks. Netflix is in there, maybe Spotify is in there. There's a few stocks in there. We had, some of the gamers like Roblox and Take-Two in there as well. But I mean, there is just so many industries impacted by this. So how do you come in as an airline, when you've got international, an international trade war going on, and then try to be like Delta, which is an international carrier, and try to predict what the international traveler is going to do? It's almost impossible.
You just can't.
It's almost impossible.
Yeah, 100%.
So I think there's going to be continued uncertainty from the guidance from all fronts, and we're just going to have to accept that uncertainty because we're in an uncertain macro landscape here right now. We don't even know what we don't know what the next headline's coming from the White House. There's never been even in the financial crisis, there was certainty. We were certainly in problems. We were certainly having, people run on the banks. We were certainly having a financial crisis where the Fed needed to take action. This is not that market. This market is all uncertainty because, if Trump just says, you know what, we're just bailing on the tariffs, Navarro was wrong, and, we're just going to go, the markets could be back at all-time highs on that. I don't think he's going to do that. But it's not a zero either because you don't know what he's going to do next. So the market is just so full of uncertainty. I can't even imagine being a company trying to navigate this macro environment with this much uncertainty coming from the administration.
So, folks, just wanted to give a heads up. We got about 7 or 8 minutes here before 8:30 a.m. We are going to get jobless claims for the last couple weeks here. S&P 500 futures kind of drifting a little lower, just under the 5,400 level. But let's keep the earnings train rolling here, and let's talk about IBM from last night. They did report a beat, and their guidance wasn't bad by any means. They are expecting Q2 sales in the range of 16.4 to 16.75 billion. Analysts were down at 16.3 billion despite, a beat and some decent guidance. Shares down about 6% here this morning. Christian, did you track IBM at all last night? Is this one you're looking at for today?
Yeah, I was wondering how this one was going to be. Last quarter they had a real nice beat. This time around, so speaking of sell the rip, as Mr. Triple D has we've mentioned now a couple times here this morning, excellent example of that. Stock was all the way up to 260-ish. And completely reversed. And I don't know. To me, it seems like a pretty extreme sell-off. I don't see anything that's really that bad, unless I'm missing something.
I know, right?
Here. Yeah,
I don't think so.
Maybe you guys are seeing it. Maybe they were a little bit conservative, I guess, in their outlook. But as Dennis just said, who doesn't want to be a little bit conservative with what they're doing? So I kind of like the dip here. What about you guys? Dennis, is this a dip that you want to buy?
No, because it's just when stocks go down on bad news, it's really bad.
Yeah.
You never want to see your stock going down when stocks go down on good news. When stocks go down on good news, it's really bad. That's the worst technical signs you can possibly see. It's probably a situation, a little bit, Christian, where IBM was not far from all-time highs when it reported. If you just look at the charts, you've got tech stocks off 20, 30% from the highs. IBM was in striking distance of an all-time high here, $265, so within 20 points. And then it went up after hours and kissed up near those all-time highs. Screwing the news algo all to hell because the numbers were good. They bought it straight up the news algo. And this is, again, what happens, when you have the news algo, everybody goes wide. News algo comes out and it's executing on the headline. It says, beat, raise. It says, we're buying all this. It sweeps out everything in there up to 255, 260. So these stocks just instantaneously at least go up to 255. And then you get a few Johnny come latelys, maybe buy a little bit higher. What happens is when they sweep it out like that, there's nothing in here. it's empty. You just cleared out the book because you bought it all. It's already thin because normal market makers are not going to be making markets on a stock that is reporting earnings. Like, get the hell out of the way. It's also after hours, so there's less liquidity to begin with. But when you come in, you buy it all, there's nothing in here. The book doesn't instantaneously fill back up with new like buy orders. You just took out all the sells and you've moved the price up to here. So now there's a huge gap here that you've just created yourself. So if there's no follow through buyers, and people might be saying, well, I'm not buying IBM at an all-time high, the human being, when the stocks are off this much. And, well, then they start looking and then it starts leaking down a little bit. It's like, oh, did I miss something? People are guessing. And then all of a sudden, the stock starts coming down and it comes down so much easier. Like, for instance, this morning, Comcast traded up 80 cents on 5,000 shares. It traded down the 80 cents on 200 shares. Not joking. 80 cents up 5,000, but they cleared out the book. There was a 200 share bid, 200 shares down 80 cents, and the stock's trading red. And everybody's like, oh my gosh, what just happened? That's after hours trading. It's thin. And when the books are clearing out, I don't even understand how these news algos are making money. They must make it just because on the real good ones, they must clean up. But man, it's got to be a tough business sometimes. And they take massive losers sometimes too, because some news algorithm bought a pile of IBM at 254, 255, 256. And I don't know if it's getting out of it that fast, because I don't think it can, because there just isn't that trading volume on the downside. So now you look at it down 15 points here. You not only have, so two reasons why, maybe it bounces back. Nobody has a crystal ball here. And the earnings weren't that bad, to your point here, Christian. But you got all the bag holders that bought it last night saying, like, oh, this is a pretty good quarter. I'm going to buy this dip. And then it just continues to leak in their face. So you have a whole new pile of bag holders, and you have a stock that's not that far from all-time highs. So that's why I probably don't come in here, even though some of these trades bounce back, even though I like buying dips. I mean, I don't want to see a stock going down on good news.
Well, here was the culprit in this. The CEO came out yesterday and said, in the near term, or I'm sorry, the chief executive officer came out and said, in the near term, uncertainty may cause clients to pause. So that's what did the stock in yesterday. He said still IBM has not seen a material difference in client buying behavior. So they're kind of like undercutting expectations a little bit and saying, hey, we're concerned. Now, you go back to they're also adding uncertainty into an already uncertain environment. If they would have said, hey, this, if uncertainty continues, like if they try to quantify it, maybe that would have helped. But they're pretty ambiguous about what their future holds for them. Hence, the stock's going to sell off on that. So when you're adding that, they're like, hey, we're doing really well, but we could see a pause on their consulting side. That just adds to it. And I think you cross that with ServiceNow, and ServiceNow did not say anything like that. They were much stronger. So
I think that causes the stock to continue to leak, Christian. But that conference call and those commentary was well after the stock had already sold off. So we can't just, I think, credit that. Oh yeah, it was these comments that caused the stock to sell off 2 minutes after it got bought up 15 points. So I think you're making a good point that probably keeps a lid on it from rallying back, those comments. But I mean, the stock reversed well before the conference call. That stock reversed. You saw it, Christian. It reversed, and how, like, if we blow up that chart and look a little bit closer, it wasn't trading up for more than like 2 minutes. So it reversed well before that conference call. So I think that is probably why the continued leak, why, and sometimes stocks can bounce back on the conference call. If he would have said something otherwise, where, uncertainty, like we're seeing no problems and clients aren't pausing, take the opposite, the stock maybe bounces back on that. But I think that's, another reason why maybe I wouldn't buy this dip is because not only, do you have everybody caught from the initial earnings reversal, which is what it was, you also have commentary coming from the conference call that probably adds fuel to that fire. The fire of, everybody who just bought this thing up on good earnings is caught. And now, we've got the CEO coming out here and saying, uncertainty may cause clients to pause. That doesn't make me all feel, warm and fuzzy inside to come and buy the dip either. So lots to consider there. But sometimes, earnings, sometimes stocks just reverse for no reason whatsoever. And that's the truth here too. We're kind of in this, earnings season where Procter & Gamble is one.
I'm just going to
here's another case.
hold on
in
1
point.
second. I'm just going to cut in here because we got data coming up. I
Oh,
don't know
sorry,
if any of
yeah.
this will be material, but I just wanted to go over it with you really
Yeah,
quickly.
thank you.
You
Thank
get
you.
durable goods orders come in 9 plus. Sorry, my volume's up really loud here. Plus 9.2%. Versus 2.0. That's your durable goods orders. That's a leading indicator. Initial jobless claims comes in right on the screws, 222 versus 222. Not much of revision there. Capital goods, non-ex air comes in also right in line with expectations, plus 0.1 versus 0.1. So the real number that kind of was the differentiator there was durable goods coming in hot.
Not a huge reaction in stocks, though. We had a couple people in chat just asking if, the data here was going to be consequential. Data just hasn't been consequential in the last, could I venture to say, few months. I think so, yeah. When we're held captive to all these macro headlines, even though we're getting data on the macro environment, it's still just, we're being held hostage to those headlines kind of coming out of the Trump administration and around the world. We do have our guest Jim Tassoni in the background, but I was hoping that we could maybe really quickly get to a little bit of an earnings preview before the guests, if you guys are cool with that. You guys want to talk about Intel coming tonight?
Sure, Intel
Yes or
and
no?
Google's probably
Intel
the
and
one that
Google,
I'd be
yeah.
more interested in. But those are the two big
Yeah,
ones here.
let
And
me get you some estimates on
yeah,
Google,
please,
Dennis, and then
please.
keep going, and I'll pop in a sec here with the estimates.
Oh, sorry, he was going to pop in with the estimates. I thought you were going. Okay, so let's go to Google here first. I mean, one, it's all about the setup, and again, we've got to start considering the setup more than anything. And Spinner is making the point in the chat here, point that I just made on IBM. When stocks are sitting down near their 52-week lows, the bar is very low. When stocks are sitting up near their 52-week highs, the bar is very high. So I mean, they have to do extra stuff. So we've got Intel. Bar is on the floor for Intel. Dog of all dogs. Garbage, been down forever. I mean, if they say anything okay, the stock will probably rally. Google's a tougher one. It's bounced back a little bit here.
Right? Don't you think I think low bar for Google too. I think they just got to say something pretty positive, like that they're not getting slammed by Chat GPT and all the other AI models.
Yeah.
Because Google search is like that, and they've got so many regulatory concerns too. That's the other issue with it, right?
10-point expected move on Google. I'll grab the Intel expected move for you here too.
7%. I was just doing that too.
Yeah, the Intel expected move looks to be about buck. I'm just adding up the calls and the puts at the close. $1.70, $1.70. So what is that? About 7, 8, 9%, 9%. Yeah, bar is low. So IBM bar is high. These bars are low.
For later, when y'all are tuned in and getting ready to get this info, here's what analysts are expecting. Google, we're looking for $2.01 analyst consensus estimate. Sales around 89 billion. And Intel, we're expecting a break-even number, zero, neither an earning or a loss. Sales 12.3 billion on Intel. Both of those reports are due out after the close today. You guys want to go over to get Jim and see what Jim's thoughts on some of the things we've been talking about? All right, here we go. Jim Tassoni, CEO at Armor Wealth Strategies. Jim, how is your Thursday getting kicked off here?
Oh, it's going pretty good outside of the markets. April and late April in Michigan, right? My daughter had a softball game Monday, 35 degrees. She's got one tonight. It's supposed to be 80 here. So you gotta love late April in Michigan. You never know what you're gonna get, but I'll take 80 over 35 any day.
Absolutely. So any earnings on your radar here for this week? Anything that we were just chatting about? Macro headlines pretty quiet here today. I think everyone's kind of focused on the earnings parade. Did you have any on your radar here, upcoming or just past?
Yeah, it's funny. In my shorter term, like my swing trading accounts and stuff, I've almost moved completely away from individual stocks this year because I've just seen, and we talk about whether it's, data that comes in the morning or earnings. Earnings will drive like an individual stock, but a market as a whole, I mean, it's so beholden to a handful of people and what they're saying right now. Trump, Bessent, Powell, Lutnick, like these are what are really mattering to the market overall. I mean, earnings are such a secondary story here right now. I mean, yes, in my longer term portfolio, I'm a holder of Google, so I'll be paying attention to the earnings, seeing the outlook, what's going on. But this isn't that's my long term portfolio. That's not a position that I may add or trim depending on what's going on, but these are 3-5 year longer holds. So that's not something that's going to wiggle me out on an earnings, good or bad. But I continue to pay attention to these guys who are really moving the markets, because we see it every day. I mean, and it's funny. I actually saw a report that said, when Bessent is the lead story of the day on CNBC, when it's his headline that's the lead story at the top, the market's up like on average 2% those days. And when Lutnick is the lead story, the market's down like 4%. So literally that's the trade. It's insane right now how
who's going to talk up the market and know who's going to talk down the market.
Mm-hmm.
Have you ever, Jim, you've been in the markets a long time, as I have as well, and I've been saying I've never seen an environment where we're so addicted to like what the next commentary from the White House is. It's like to a point of ridiculousness where we're seeing whipsaw action 3, 4, 5 times a day sometimes. It's like, to your point, nothing matters. All that matters is the next thing that's coming out of Trump's mouth. Like, I downloaded Truth Social because I'm like, I've got to have it. So I put, I've got to know when he's saying what he's saying, because his Truth Social account will move the whole entire market 2% if he says something about, oh, really good talk with Xi, and then they're talking like, and it's so annoying too, because, Trump's talking, a couple of days ago, we're going to get a deal done with China. We're going to get a deal done with China. And now we find out they haven't even spoken to China. They haven't even spoken. So it's completely just trying to talk up the markets. Like, it's completely not even like, what we're actually doing. It's like the market's down. I really believe 2 days ago, they had a closed door meeting when the S&P was down like 510, when SPY was down to 510. I truly, truly believe they had a closed door meeting and saying, we need to get this market higher, because Bessent comes out talking strong, Lutnick comes out talking strong, and Trump came out with all of his talking points. I'm not firing Jay Powell. That was fake news. The deals, we're going to get deals. We work in deals. Everyone's 100 countries come to us for deals. And, China, the tariffs are going to be much less on China. It's like he went bang, bang, bang. Like he had like a list of talking points to talk up the markets. And that's obviously when the S&Ps, went from 525 to like 540 or 539 overnight, or 545, even like that, 200 S&P points. I mean, I've never seen a market that is just, so basically manipulated here to a certain extent by whatever the hell the administration's saying next.
And it makes it, and to your point, that makes it very difficult to trade, especially someone in my position who's not, you and to an extent, Christian, you guys do more your day trading thing and you can kind of move around these. I mean, it's still really difficult. But somebody like me, I mean, we talked last week, I put the short on at the open last Monday on the SPY at 544. I felt really good for like, okay, we came down, we bounced. This is a good place to load up a short. And now we're just wiggling around here, and it's really difficult. And it's just a hard environment to trade. And so, I mean, the markets are not going to go anywhere with all this uncertainty, and with conflicting pieces of information coming out all day. All we can really do as traders and investors, and Dennis, you and I talked about this earlier this week in the Stock Trader Network room, is we need to have our second trade first before we get in. We need to identify our trades. We need to identify our levels, and we need to be slaves to our process. And so, for instance, like my short on SPY at 544, I know if we close above 567, I'm out. So irregardless of headlines, what Trump says, what he doesn't say, Lutnick, Bessent, any of these guys, that's my trade. I'm targeting a test back down towards those lows at like 494. I still think that some of this tariff news that's gone out, I mean, I was reading something that I thought was really interesting that said, a lot of the shipments from China, these, that are coming via boat and via freighters, I mean, these things take 30 to 45 days to reach our shores. So a lot of people are saying, the news that came out on the 9th and 10th of April, we're not even really going to feel any of that adjustment for 30 to 45 days in the future. So I've talked to, and these aren't public companies, but I've talked to small business owners who are just getting slammed, guys who are selling on Amazon, people who have inventory issues already. And they're literally saying, and I'm not saying we trade off of this, but I'm saying we do need to pay attention to it, that there are going to be supply shortages coming in the next couple of months. There are going to be inventory.
Has to be.
And we need to get a handle on things. We need to get some clarity one way or the other, because CEOs, people in the markets, they can adjust to whatever the administration throws at us. But it's this back and forth that makes it really tough on businesses, business owners, CEOs, companies, and investors alike.
It makes it really tough. Like, I just don't know, like, how being a money manager, and I was even arguing, Jim, to the point where imagine being a company and trying to guide in this quarter coming up with not even knowing where the hell tariffs are even going. I mean, it's got to be really, really tough. So, I mean, everybody wants to be, these companies do want to be transparent, and they want to give you the best idea, because they don't want, come out with earnings and then, they don't hit it and the stock tank. So they want to try to like guide you to where we think we are, but they don't even know where they are. They're doing scenarios and stuff. It's just, the uncertainty is astronomical here. Like, the uncertainty, I'm completely uncertain. I have no idea what's going to happen next. We could come in and they could be a deal with, with whatever country, and the S&Ps could be up 100 points. Or there could be like somebody else saying something like, well, we're no deal even close, and we're raising the tariffs over here, and we're down 100 points. Like, it's almost impossible. Go ahead, Christian.
I'm going to come in, and I'm just going to talk about a couple things that I see, because Jim, you're absolutely right. Like, this is a very macro tape. We're supposed to be like, normally right now in the middle of earnings season, we were just talking about Google and so forth, that, this would be there would be much more attention to earnings. And there still is attention to earnings, but it's taking a backseat, just like we were talking about with economics. Like, economics are taking a little bit of a backseat to this. But I'm watching the VIX go down right now. The VIX, like, for me, like, coming into this week, I wanted to see the VIX start to kind of get back below 30. We're sitting here now 27, and so I was just listening to the points that you guys are making. Someone, like, they are dialing down the rhetoric. It's different than what we saw a couple of weeks ago, where Trump was ratcheting up tariffs to China. Now the rhetoric is coming down a little bit, and it sounds like they're going to at least want to negotiate some of these things. There's still a lot of uncertainty. I'm not arguing that, but it seems like they're dialing this down a bit. So I'm basically saying, okay, what I'm trying to look at is indicators, watching the price action to say, because this stuff is really complicated. I don't know if I'm going to be able to navigate, because I'm not a trade expert. I'm certainly not a trade war expert. I'm not a foreign policy, so, I think you got to pay attention to the price action. Is there anything? So I know that, last time I think you were on, you're pretty negative, and I think you're still that way with the environment that we're dealing in. Is there anything that's getting you a little bit more excited? It's to say, okay, this is becoming interesting to me, or are you still like, hey, I'm going to basically sit in more of short U.S. equities, which I think was your last. Yeah.
And I'm still short U.S. equities. I'm still not a big fan of that, but you're spot on with levels and with trades and with price action. And for me, that's really all I can do as well, because I read about this stuff, I try to analyze it, but it's the same thing. I don't think if you gave me, some of the information a few days ahead of time, I would necessarily know always how the market's going to react to it. So I'd much rather trade the price action. Right now, for me, the S&P and the U.S. areas of the markets, the various sectors, to me, are still showing bearish price action. And again, it's all about time frame. I'm talking about, 1 to 3 month time frames. I still don't see a reason to be long those markets. Things that are getting me excited, though, is I do still have longs, which offset some of my short US in a lot of international ETFs. And I like, whether it's European markets. I mean, I'm looking at my list right here. I'm long Austria, EWO, Germany, EWG, Sweden, EWD. And I know I'm rattling them off. Finland, Italy, France. I like Brazil. I like Chile. I like Colombia in the, more emerging market space. I'm long Mexico. I'm long Singapore. And these are all based on price action. It's not necessarily that I think these markets are better than the US. It's just I like the uptrends in these markets better than what I'm seeing in the US markets right now. And so I choose to be long those. I like to have some long in my portfolio. The other place that I've been long all year, and it's sort of an interesting trade right now, is in the gold markets. And I actually this morning am thinking, depending on where we open up, and I'll probably, if we open up below, and it looks like we're going to, below kind of that 308.95 to 309 area in GLD, I'm probably going to exit my GLD position for now. I've had a huge gain on this. We've been in it forever, and we love this trade. But what I did yesterday actually is I was looking for an opportunity to get into GDX. And that opened to me. I bought that thing on the open down at about $48. And we like that. So we've got to stop down below 44. We got long about 48. It's working right off.
Hold on one second. Hold on. I have a question for you. I'm sorry to interrupt. I want to get to GDX, but do you think GLD, do you think that was basically a blow off top that we saw 2 days ago? I mean, the volume certainly higher than normal. Did that go into your thesis of saying, hey, I'm going to take profits in this?
Yeah, it sort of did. Also, I had kind of that in my technical work, I had sort of that 308.95 on the GLD as an area where if we got to close below that at this point, I wanted to go ahead and exit that trade. Like I said, we've been long pretty much all year on that trade. And I'm not saying we won't get back in again if the uptrend resumes. But for now, I think there could be a pause. There were a lot of people who sort of long-term projected as we started to break out this 3,500, 3,600 area on the gold contract could be a point where we stop. And we touched 3,500 and then we had this pullback. I think this is an area where we could get some rest. We could see, wouldn't surprise me at all with the run we've had to see a 10, 15, even 20% pullback in the price of gold. I'd be a buyer. And also I'd be a buyer if we see a resumption of the uptrend. But right now, I don't want to, I in no way want to short the gold market right here. But I think it's an area where I can take some profits because profits are hard to come by right now in these markets and trying to trade. I'm willing to take some profits here, plow some money into GDX so I still have some exposure to that market and see what happens.
And what about, are you looking at silver at all?
I really haven't been trading silver a lot. I got sort of whipped around in that, if I'm being honest, earlier this year. And it's sort of been no touch for me. That market's obviously been looking really good over the last week or so. For me, if I look at and I'm just pulling up my charts right here. I mean, my longer term chart is still showing a relative downtrend, but we broke above the $30 area, which to me was sort of a resistance point when we had that big breakdown with the tariff talks a couple weeks ago. Reclaiming that $30 area would make me more neutral now on this than bearish, but I'm still not looking to play long. I probably should be because it's been a great trade, but I just haven't been involved with it.
Do you think, I'm going to just ask just one other question too, because I see that there's a Fed speaker talking right now. Hammock, I don't even know who this Fed speaker is. Fed could move rates in June if data is clear about the economy state, Fed not afraid to move quickly if necessary. Do you think that this market does need rate cuts? Do you think that that's where we need to get to, where the Fed does get to the point where they're back with cutting interest rates?
God, it's such a tough question to answer because, I hate the word data dependent because we're all data dependent, right? Everybody is data dependent. Nobody does anything, just licks their finger, puts it in the air and tries to guess. So I don't like data dependent. To me, though, I also think we need to be really careful about, I think we've been so heavily reliant on rate cuts as sort of the juice to this market. And every time something goes wrong, oh, let's just cut rates because that'll stimulate the economy. That'll get us going. That'll save the markets. With that being said, I think that we're in a position right now where, I'm struggling with the rate markets as a whole. I actually am short TLT via the TBT right now, but I don't necessarily love the trade setup that I'm seeing right here. It's one of those situations where I think we've got, and it kind of dovetails back to what we talked about at the beginning. I don't really have a way to be overly educated on my opinion on this because there's so much uncertainty. I really want to see how a lot of people are saying, oh, we're in a recession already. And other people are saying, no, that's not the case. Look at this data over here. I think we need to see how things play out. I think June is definitely on the table. I'm not saying there's no reason we should cut, but I don't think coming in and saying that we are definitely cutting no matter what, we need to cut. I think that the market needs to learn, in my opinion, and maybe this is, an old trader talking here, and I guess I am getting on the older end here, but the market also needs to be able to stand on its own 2 feet and not always be so reliant on the Fed coming to its rescue unless it's necessary.
We've been addicted to easy money for 25 years.
Yeah.
Like, that's really the bottom line. And it's like, let's go back to the punch bowl. Trump's chanting for it, everybody chanting for it. I mean, when it starts getting tough out right away, let's cut rates. Let's spike the punch again here because we got to keep this party going. I mean, this has just been the way forever. And I mean, we don't even know, like without the Fed, like without monetary easing, without, government spending, like where is the economy in the last 25 years? It's in a lot different spot than it is. So, I mean, if we can't undo it, $36 trillion worth of debt later. Why are we 36 trillion in debt? Because we absolutely can't have a bad recession. We can't go into depression. We've got to just keep printing money forever and ever and ever to sustain this so that we don't have any bad times at all. I mean, and again, that's maybe what Trump is trying to solve, like doing tariffs and doing things. Mm-hmm. So there's a point there to saying a lot of this is not sustainable, but I mean, we've been addicted to easy money forever, and that's always where they go back to. Like, let's spike the punch bowl again. So how do we get out of that? How do we get out of 30? Go ahead, Jim.
No, I was going to say, and if Trump and his administration is truly willing to suffer the pain of trying to get our deficit reduced and trying to balance trade and all these things that they talk and then sort of pull back from, I mean, it's inevitable. There's going to be a lot of pain here, and I just don't see how we can do everything we're talking about doing. Lower rates, reduce the debt. I mean, something's got to give here, and I'm not. Again, I don't like to just be sky is falling. I think there's always opportunities in the market, but I'm not a big fan. Maybe it's just my personality that I'd rather protect capital and live to fight another day here than get overly aggressive. I just don't think we're in that easy buy the dip mentality anymore, where every time we get a pullback, it's an easy buying opportunity and we're off to the races again. I think regimes have changed. I think the geopolitical uncertainty is enormous right now, and I'd rather just be more cautious and try to hit singles until we get a more clearer front.
Singles is always a way to go. Jim Tassoni, we love having you, giving us, that longer term outlook because we're all stuck in short termism here all the time. Jim, we'll get you back on here obviously very soon. Enjoy your day. Try not to get caught up in those headlines.
Sounds good, guys. Take care. Thanks.
See you, Jim.
Thanks, Jim.
Later, Jim. One topic that we kind of only brushed on a little bit was some of those auto exemptions that we heard a report from last night. And just also wanted to mention, I did see Citi this morning reinstating coverage on a number of auto-related names. They reinstated GM with a buy, they reinstated Ford with a neutral, and then they did a few other like auto like parts manufacturers, Lear, AutoNation, GPI, Penske with buys, and then they did Asbury, ABG, and SAH, Sonic Automotive, with neutrals. But, just like a little segue here to kick it back to a conversation in the autos, one name that we didn't get to talk a ton about, I wasn't listening all the way to when you guys were talking with Jim, but one name that we didn't get to talk a ton about was Tesla, and they certainly are involved in this discussion here on potential auto exemptions. Dennis, you're of course very strong opinion on Tesla. What did you think about in the context of these potential exemptions last night? What did you think about Tesla?
Well, again, so we get the headline breaking just after, like 4:20 last night. We see GM just ripping higher and Ford ripping higher. And you're like, well, what's the news? And then we find out there's going to be possible exemptions on tariffs for, the auto parts coming from China. That's good for Tesla too. So Tesla was ripping up on that as well. The issue I got is you see this GM, and if you see it from last night here, we'll start with GM because it was the one that moved the most. It was up 2 points on this last night. So you're talking about a 5% move here almost for General Motors in 5 seconds, just rips it higher. Again, that news algo just coming in and saying, buy, Mortimer, get in there, buy. And then they get done buying and there's no follow through. Same thing happens again. It's like, oh, well, this is a crappy stock in a downtrend. And, there's not a lot of people flocking in here. So then the thing just starts leaking. And now we look at GM and it's giving it all back. Tesla was popping on that yesterday too, because obviously they get auto parts over there from China as well. But, it's kind of giving it back here too. I know it just lifted here in the last few minutes, probably with the overall market. But we're just back to the same story, is that you get the initial rip on the headline and there's no follow through. And with no follow through, it's hard to come in here and chase anything. So I'm still back to what Christian's saying. We're in the same camp. We're just selling rips on stuff because it doesn't appear to be follow through. Christian, what are your thoughts? With that move yesterday?
Well, the GM and the Ford, we were talking about this, it seems like every time they go up on one of these announcements, they just come right back down. It's, if there was a little bit more of a sustained move, I would be looking to kind of fade these things. Why do I say that? Because GM and Ford just they've not been very good stocks, just overall. If you look at we could look at a weekly chart of GM, but it's just very sideways. The stock doesn't really go anywhere. It doesn't have any major catalyst. I wanted to talk about something that I thought was kind of interesting really quickly with Tesla. I saw Elon retweeted this, and I think that this stock did very well yesterday. It held in there. However, it's not turning the corner yet either. So it had a good day of gains. But I think for me, it really needs to get above 257.70. So that's my technical take on this. But there is a story out that Elon retweeted. This is by Doge Designer, and it says Tesla owners will have the ability to turn their cars into robo-taxis. Technically, your car will earn money for you. It's like Uber, but the car drives itself. So if you're sitting and you're going to work and you're in your Uber, and you've got this where you've got the ability now to basically turn your car into a robo-taxi. I've never heard this before. I don't know what the truth is to this, but isn't this a game changer?
No, Christian, this is something that they've talked about for the last year, so you may have just missed it on it. Okay. But I've been talking about this. This was my whole bullish thesis on Tesla last year, was that you could be sleeping and your car just goes out there and picks people up, and then comes all the way back. So actually, this has been built into the story here for a long time. It's one of the main reasons why robotaxi is so disruptive, and it's one of the main reasons that I was so bullish on Tesla last year. I mean, that's all been lost, but this story in itself is, potentially true. I think that's the long-term vision. He actually went as far last year in the conference call, it's probably about 6 months ago, and said that he believes that the amount of money you can make from your car turning into a robotaxi will be more than your car payment. So like he wants you to be actually like just a continuous money maker for you. So it's like a huge possibility. I mean, this is the story with Tesla, and it's why it's such a tough, stock for me at this point in time, because the future could be so bright here. They have so many awesome things that they are working on, from self-driving cars to to the obviously the robotaxi and the humanoids. I mean, there's so many things, the energy business. But then, we had this brand damage done, and we don't even know the repercussions of that yet. So, I mean, I'm so bloody torn.
That's the other side of it. Yeah.
I'm so torn here. Like, part of me wants to just go all in on Tesla again and say eventually the brand damage will subside, and all of this futuristic technology that you just pointed out here is coming. I believe full self-drive is coming. It's going to be a game changer. Just, even like your car, like Joel's went as far to say, and I agree with him, like, you won't even have to own a car, because you just summon the robotaxi and it just comes get you. So what's the point to even owning a car? And then you don't need car insurance. You don't need other things. I mean, you can just see how it could all change. I can see it. But then I'm like, he's out there and he's done so much brand damage to himself that maybe, nobody gives a crap. And then you got China competing, and they're doing the same stuff too. Build your dreams. BYD, game-changing stuff over there too, doing the same type of stuff. But I mean, this is the story. This is the story, the sexy story behind Tesla. And if we can get by and the brand can get repaired, that sexy story is still there. It's just like, we just got to get by this brand damage. That's the problem.
Well, I know we're kind of going on a little bit overtime here, but just from a technical standpoint, on the weekly chart, either you have a bear flag here, right? And this is going to break one way or another. It's either going to break to the downside, and that's a bear flag, or it's going to break out of that. So I think, you don't have to be early here. I know folks on Twitter, they like to make their predictions, but I don't think you need to do that. I think you can kind of wait for which way this thing is going to break. If it starts to break this range below, then this is a bear flag. If it starts to break above call it 258, then the stock is recovering, and I would be a buyer if it moves above 258. So anyway, great show today, guys. Any last thoughts?
Just expect more volatility in shop. That's the only thing we could promise here. I can't promise direction. I do like what you said to Jim, Christian, and I agree with you that this administration is bringing down, like, they're not as aggressive as it was, like tariffs at all costs, 4 years and 140% to China. They're dialing it back, and that's a good thing for the markets, and that makes me want to buy dips. So, I mean, you made a fantastic point just saying, and stopping and interrupting us and saying they are dialing it back. You are absolutely correct. So, that makes me want to start my shopping list and want to start looking for companies to buy. Because if we get down to a situation where it's 5% tariff here, 10% tariff here, the market can totally handle that. It can't handle 140% tariffs on China. It can't handle that. So, but it sounds like we're dialing it back. And that actually makes me more inclined. And you can see even on, the dip opportunities, it's not like we didn't get any violent swings here the last couple of days. It was really important what Trump did the other day, even though I said it was talking points and he was talking up the market. I mean, if he sticks to that, where he's not firing Powell, he's going to bring down the tariffs to China. If he sticks to everything that he said, he may not, because he changes his mind tomorrow because he gets mad. But if he does, that's all really good news for the market. So maybe we should start thinking about buying dips. In the longer term account, anyways.
My final thoughts are,
go ahead.
My final thoughts are, stay nimble, my friends. Have a great day, everybody.
Ooh, like it. Later.
Okay, thanks, Christian.
We started with some good old classic sports talk. We had, good 4, 5, 6 minutes of sports talk. But look, we went a little overtime here with some good hard stock talk. We're gonna jump over to the SCN room, ladies and gentlemen, at 10:30. let me just double check here, at 10:30 in the SCN room. We are going to have Wedbush's Michael Pachter on. We'll be talking,
awesome.
I'm sure, about a little, little video game action, maybe a little entertainment action. StockTraderNetwork.com. If you want to join us, Dennis and I are going to get everybody ready for the open, and we're going to do some trading at the open, just some good old-fashioned trading, folks. We'll see you over there. If not, we'll see you tomorrow on Pre-Market Prep. Good luck, everybody, today.